Do you know what's trending today? The boom in India's stock markets. The bulls are leading the way. Key indices are breaking records. We'll discuss all of it later in the show. But first, we want to tell you who may be feeling left out. China. Once the engine of the global economy, China today is a laggard. Its economy is pulling down global growth. And it's not just China's problem, it's your problem too, because Beijing's poor economic performance has a bearing on all of us. Tonight, we bring you the numbers, the trends and the implications, starting with the latest set of data. Today's headlines featured Evergrande. It's a Chinese property giant. It has been in news for all the wrong reasons lately. Today, it reported more losses. We are talking about losses worth $81 billion. $81 billion in 2 years. Evergrande has been in financial trouble for a while now. The company lost $66 billion in 2021 and another $15 billion in 2022. It defaulted 2 years ago. Before that, it was China's biggest developer. Today, it is one of China's worst debtors. By last year, the company owed some $340 billion. Since 2021, Evergrande had not released its financials. Today, they finally did. And it revealed how deep the rot is. The fall of Evergrande triggered a major churn in China. It inflicted some serious pain, and it had a ripple effect on China's property sector, on its banks, and on its economy. 50 developers defaulted after Evergrande, and since the Evergrande collapse, China has been stumbling from one problem to another. Yesterday, they released the latest economic data. China's economy grew by just 6.3%. It doesn't sound like a very bad figure, but it's slower than what had been expected. China's exports fell by 12% last month. Sale of flats down by 27%. These are poor numbers. They suggest that China's economic growth has stagnated. Although yesterday Beijing tried to put a different spin. They tried to push a different narrative. Listen to this.
Although the Chinese economy faces increasingly complex and challenging external environment and domestic development pressures, its fundamental strengths and its advantages characterized by resilience, great potential and vitality remain unchanged for the long term.
There are challenges, but the economy will recover. That's the message from Beijing. China is making it sound like there is no reason to worry. But behind the scenes, Chinese officials have gone into an overdrive. They're talking to the US again. In 1 month, China has hosted 3 senior American officials. In the next 2 weeks, Chinese ministers will travel to Washington. And guess what's on the agenda? Trade ties. Plus, China's premier is making fresh overtures. Recently, Li Qiang addressed business leaders. His message to them was simple. China is open for business.
For the whole year, we are expected to achieve the target of about 5% economic growth set at the beginning of this year. Recently, some international organizations and institutions have also raised their forecasts for China's economic growth this year, showing their confidence in China's development prospects.
This was last month. Now the numbers are out and they're well below China's targets. This year, Beijing wanted to grow at 5%. But from April to June, China's economy grew by just 0.8%, which is less than the 1% mark. At this pace, Beijing is sure to miss its targets. And it seems to be asking for help. This week, there is another important meeting. China has invited some of the world's biggest investors. And who will meet them? China's financial regulators. The goal is to seek investments. And who is going to attend the meeting? Well, mostly fund managers from large private equity firms, also some representatives from sovereign wealth funds. There is no official guest list, so it remains to be seen who will finally turn up. But here's the bigger question. Can Investor Summit solve China's problems? Experts don't think so, because China's economic problems are more fundamental in nature. The debt levels are way too high, more than 250% of the GDP. That's higher than even the US. There is weakness in real estate, unemployment is high, and sanctions from the West are forcing businesses to take their investments elsewhere. These factors are exerting pressure on the Chinese economy. Until Beijing fixes these problems, there can be no recovery.